It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another weekend that is dropped with the Real Estate Breakfast, your Australian property radio podcast, talking all about your local and national real estate trends, trying to understand and navigate the next cycle. Yes, clear and free of any world events that might give us pause to think or even second guess the current market activities. And remember, you can now leave us a voice message. You might be listening to us from outside of Australia. We know that there are plenty of expats scattered everywhere. Let us know if you're planning on moving back, on what that looks like, or perhaps you are going to be migrating to Australia. Let us know if there is anything in the current market that is worrying you, and you'll find the leave a voice message below in the show notes. This is a good one. All you've got to do is just tap on the link, start talking, and we'll get it. And it's a Saturday, September the 13th. And good morning to you, Squeak and Tommy in Parramatta. Long-time listeners, apparently. You are brothers in your 20s, saving for your first property, and you'll think you'll be getting onto the property market a little earlier because of your increased borrowing capacity. And you said that you are going to be fixing. You're not taking any chances. Now, this was a question that I posed a few days ago to let us know if you were going to be fixing, and you are going against the trends. I get it, though. You know, you're playing for safety. Nobody can begrudge you for that. And let us know, too, when you buy and how that all sort of comes out in the wash. If you would like to send us an email, you can do that to our email address, myrealestatepodcast@gmail.com. Well, let's catch up with Anthony Landahl, the Managing Director and Mortgage Broker at Equilibria Finance. Well, I've firstly got to say to you, Anthony, Squeak and Tommy in Parramatta, they're going against the grain.
Yeah, they are going against the grain. Generally, when rates are going down, people stick with the variable rates and try and capture those benefits. Bearing in mind, though, it is horses for courses. There are some people who like the certainty of fixing. There are some providers who might be one or two rate cuts ahead of the variable rates at the moment. So it does give some certainty and comfort, particularly for young buyers for the first couple of years of their mortgage. If that's going to work for Squeak and Tommy, then go for it. But it is a little bit against the grain.
Also, yesterday, we were talking to Jacob. Now, this is a guy that decided instead of travelling the world in his 20s, he got onto the property ladder. And they did these two contrasting. The article was about Kate as well, who is now 41 and buying her first property. The thing with Jacob, though, travel didn't disappear. It just came later.
As we watched so many of our friends either do the London thing for a couple of years or go and do these marvellous Kentucky tours or world tours, and that was just simply not something we could afford to do because we were paying a mortgage. However, several decades on, that has certainly flipped and we've been able to build wealth that has then allowed us to go and do this enormous amount of travel that so many people don't have the privilege to do in their 30s and 40s because they're just starting to take on the much bigger mortgage now. A number of friends talking about how lucky we were, privileged and special it was that we had that opportunity without really respecting that was a big commitment and risk that we took. We don't feel that we got to this position through luck. We made a conscious decision to do that and to go through the hard yards, and now we are reaping the rewards.
Yeah, it's a very, very good conversation that we had with him yesterday. This is something that you're dealing with all the time. You're talking to the youngsters coming in and having that, what do I do moment? Do I go off and travel or do I buy property?
Very interesting story there from Jacob, and obviously done very well and made a lot of sacrifices when he was younger to get to that position. And it is a conversation that we have. It seems to be a conversation we're having more regularly now with housing costs and affordability pressures increasing. And there's almost a little bit of despair with young people around actually trying to get into the market. We are of the view, I guess, if you're able to, whether buy an investment or a house at a younger age, it does give you that opportunity to leverage the growth. Certainly is a conversation we're having more and more these days.
Now, another big question in the Australian real estate market right now is whether it's smarter to rent or buy, as affordability pressures weigh heavily on both renters and buyers. So perhaps let's just step over this. What are the key financial considerations that you raise with your clients weighing up this factor, renting versus buying?
Yeah, it's a great question, and it's a question that's coming up more and more. And Jacob's a great example of that we just listened to. But there's both financial and emotional considerations around this question. With cost of living pressures, with the housing market growing so much over the last couple of years, we're seeing it more and more challenging for young buyers to get into the market. What is the cost of a house or a unit with a mortgage of that same value, and are you willing to live in that? And what is the cost of a mortgage in an area you are willing to live in? So trying to help our clients make informed decisions around the financial aspects of renting versus buying. Then there's the more emotive factors around having your own home or having your own unit gives you that security around your primary residence. Or do you in fact look at buying somewhere else and buying an investment as your first property and continuing to rent? Or do you make the decision of you're just going to be a longer term renter? It's a real challenge at the moment. It's about making informed decisions and having those conversations to help provide our clients, or if you're wrestling with that problem, helping to provide some clarity to help make those decisions.
All right, let's talk about rentvesting, the increasingly popular strategy that is offering people the best of both worlds. This is a little bit like travelling. You know, do you travel when you're younger or buy property when you're younger? Rentvesting, not exactly the same, but there is this decision to make on which way you go. And lifestyle, I mean, that plays such a big factor when it comes to rentvesting.
It does. Look, rentvesting is becoming a much more discussed and viable options for many Australians, particularly those who are looking at living in and around city areas that have become unaffordable for them to purchase a home in. Essentially, rentvesting is a strategy where people are renting a property in a more affluent area or close to where they work, where, for example, the rental yields might be lower than the cost of buying that property. So they buy an investment property in an area where they're getting higher rental yields. The price point to get into the market is lower, and they essentially live where they want to live, but they also get into the property market.
All right, it is our Saturday morning. We're going to continue the conversation in just a moment, looking to nationally which capital cities is currently cheaper to buy than rent. We'll talk about that after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
Your guys' data there from Finder shows a 2-year low in mortgage stress, yet you guys suggest that the cost of living crisis really depends on who you ask. Who is feeling the relief versus who is not?
Yeah, no, exactly. We actually have a metric that tracks this. It's called the cost of living pressure gauge, and it tracks the cost of living pressure on households in Australia over time. And it has been receding. It's been going down because people have more savings. People are reporting less financial stress. We're not at the end of the journey yet. It's fallen out of the extreme range into the very high range. So 74% is the current cost of living pressure reading, which means that there is still significant pressure on households, even though we're heading in the right direction. There's light at the end of the tunnel. Before this series of cash rate adjustments, we asked our panel of Australians, how much of a saving would you need to be able to kind of afford to live again like you used to before? And it was the equivalent of about 4 cash rate cuts for the average homeowner. And we've seen 2. So most households are kind of chomping at the bit for a couple more before things start to get really comfortable.
You're listening to the Saturday Property Market Update.
And it is a real estate weekend, a Saturday morning. Good luck if you are heading out later on this morning, heading off to one of the many auctions that are taking place. Perhaps you're going to an open home for the very first time. It always looks a little bit different when you walk in as opposed to looking at those photographs. Anthony Landahl is with me talking all things real estate. And looking nationally, Anthony, in which capital city is the cheaper option to buy than rent? In fact, there's probably a few of these cities.
These are the sort of areas young buyers are looking at where they want to take advantage of the first home buyer stamp duty concessions or the first home buyer guarantee scheme, or they just want that security about a primary residence. Continuing to rent or rentvesting isn't for them. Interestingly enough, Craig, nationally, there's about 500 unit markets and about 600 housing markets where a mortgage is a cheaper option than current rentals. Rentals have grown a staggering 40% over the last 5 years. And with interest rates coming down, there's more and more suburbs that it may be becoming cheaper to buy than rent. Nationally, it's about 8% of suburbs where it's cheaper to buy than rent. In Perth, about 2.6% of suburbs. Melbourne and Canberra, around 2%. Sydney, Brisbane, Adelaide, about 0.5%. So it doesn't seem like a lot, but there are pockets in and around these capital cities where it is cheaper to buy than rent. I'll give you one statistic that's interesting. In Darwin, 85% of suburbs have more affordable mortgage repayments than rentals. So that is a little bit of an outlier, but there's absolutely pockets in our capitals where you need to do your research on what's the rent you're paying, what would the mortgage repayments be if I have an 80% mortgage relative to the price of that property, and start looking in those areas. Can I live in these regions? What are my mortgage repayments looking like?
Yeah, and just talking about these pockets, I think we should dive into Sydney right now and find some of the suburbs that are sort of weighing the balance in favour of buying over renting. And you've got a few of those.
To start with, in Sydney, the median weekly rent's about $787. So if you're looking at a purchase price equivalent of a property, that's about $700,000 in terms of what your mortgage repayments would be at an 80% loan to value ratio. Areas where we're still capturing properties in and around that space, you can, for example, get a unit around the Canterbury Bankstown area. You can get a home on the Central Coast around San Remo for that sort of price point. Other areas where you will save on the median rent in Sydney, where essentially it's cheaper to buy. In and around Sydney, you've got the Haymarket area, the units around there. In Winston Hills, it'll be about $121 a week cheaper to have a mortgage than the current rentals in that area based on a median house price. There's pockets of Parramatta where it is cheaper to buy a house than rent. And other areas in Sydney are Mascot, Wiley Park and Lakemba. So there's absolutely areas in and around Sydney that are demographically close enough to commute day to day to the city where it's actually cheaper to buy a home than continue to pay those high rentals.
All right, so we'll wrap it up there on our Saturday morning property show. Anthony, have yourself a wonderful weekend and talk to you in a couple of weeks' time.
We'll catch up again then. Thanks, Craig.
Every morning from 6, we bring you the latest real estate news with diverse perspectives from leading industry experts.
Going through second and third agents, at the end of the day, what we hear so often and what we see so often is that the first agent, they got a price that maybe wasn't exactly where they wanted to be, but it was a good, solid price. They move to the second or third agent and they end up getting even less than that first offer.
And vendors who are listening, I can tell you after speaking to hundreds of real estate people, it's the same story. If you get that first offer and you go, oh no, I've listed it at the wrong price, often the best price is the first price. Sounds like I'm doing your job here, Nicole.
Yeah, indeed. I think, look, we have a saying that it's not the time that the vendor has been in the market, it's the time that the buyer's been in the market. And to hold out for more because you think, oh, we've only just started to market our property, it can be a false sense of security that you're going to get even more down the track.
We connect you to the best real estate information across Australia. The Real Estate Podcast.